is. All right, let me bring in the Digital Chamber founder and chairman, Perianne Boring, on this. Great to see you, Perianne. Thanks so much for being here and weighing in here. What is your take on the Clarity Act and where this goes? Do you believe that if, in fact, the crypto platforms do ultimately have the right to pay rewards, people will take money out of their traditional bank accounts and put them in crypto platforms?
Well, I mean, we're not seeing that right now. You can get yield on digital asset deposits at all sorts of companies in the U.S. today. These are regulated businesses, so the reality doesn't match up with the talking points that are being used to slow down the bill. I've really called this stage of digital asset adoption as the mask off phase. The banks have taken their mask off and their gloves off, and they've really come out very forward-facing against the bill, and they really are the last standout in terms of the group of organizations who have yet to adopt this technology, but it's coming. You can't hold back innovation. You can't put the toothpaste back in the tube. The technology is out there. It's going to strengthen the banking system. They're just being very slow and apprehensive to adopt it.
So Perianne, tell us how you think digital assets changes financial services going forward. What are your use cases? Where do you think this industry is going?
Well, just last month, we saw the U.S. Navy share in a congressional testimony that they are using the power of Bitcoin, the encryption power of Bitcoin, to protect military data. This really validates and puts a stamp of approval of Bitcoin, not just to being used in the financial system, but as critical technology in all sorts of infrastructure. When most people think about Bitcoin, they think about money, they think about the financial system, but the technology underpinning Bitcoin, the blockchain, can be used to facilitate, protect, and transfer any type of asset or thing of value, including data. So we are seeing this technology being used for financial transactions, financial assets, but we are also seeing it to protect data. I believe we will see it used in protecting other types of information, personal identifiable information. Think of healthcare data, think of the insurance industry. The types of interactions and transactions all can be done protected using blockchain rails. And this is open technology. It's open source. It's not proprietary like most software, meaning it's free to use. So it's going to make a range of services cheaper for everyday people and Americans and safer because it's protected with military level encryption.
Wow. Now, is the regulation keeping up, Perianne? Because, like, you know, here, back to that crypto bill, the Clarity Act, I mean, the Senate moves to pass the Clarity Act out of the committee, and, you know, the banks complain that, look, they're not going to have the same regulation. Bitcoin's below 80,000 over these heightened tensions, I guess, with Iran and China. But what about how you see the regulation keeping up with how the infrastructure of this market plays out?
Yeah, I mean, you bring up a really interesting point that has been very annoying to me. It's, same risk, same regulation, but what's happening in the banking industry is not the same thing that's happening with crypto exchanges or crypto platforms. In the banking system, we have the rehypothecation, we have lending, we have other types of activities that require that FDIC insurance. And by the way, FDIC insurance only covers up to $250,000. And if your account is more than that, which many businesses and some people as well, accounts are more than that, it's not insured. In crypto, you don't have rehypothecation. Assets are backed one-to-one. So the same risk, same regulation argument, it doesn't even make any sense at all. We have regulation. We have had regulation for crypto. This is a heavily regulated space. The very first action was from FinCEN in 2013, subjecting crypto platforms to the Bank Secrecy Act. We have many different protections in place to protect against illicit finance, to protect against fraud. We have a strong, robust regulatory system. The reason why market structure legislation is so important is for regulatory clarity. So businesses understand what rules apply to them, because we have a cacophony of agencies that are all applying their rules and regulations to the same asset class.
Yeah, I love all that you're saying. You make a lot of sense on that. Now, Perianne, in terms of investment and allocating capital, where do you think the growth story is within digital assets right now?
It is still very early, and so many people are like, it's late. How is it that Bitcoin's already over 70,000, 80,000, and I haven't gotten in yet? It's not too late to get in. Bitcoin follows the laws of nature. It follows the power law, and scientists and physicists that are studying the correlation and the historical price of Bitcoin are projecting Bitcoin to hit $1 million within 8 years. It's growing not exponentially, it's growing according to power law. It's a network. It's going to continue to grow, and we're seeing with all these big updates that we're talking about, regulatory clarity. You have Wall Street coming on board. All the brokerages are now allowing crypto trading and recommending allocations. We have so much demand coming into the space, and of course, supply is fixed. So only one thing can happen in that equation, and it is still early to get in.
Wow, that is a great point. Perianne, always a pleasure. Thanks so much.
Thanks, Maria.
All right, Perianne Boring joining us this morning. Stay with us. We'll be right back.